Hey guys and girls, welcome to the London session and New York session recap for Euro Dollar on Wednesday the 5th of June 2024. So, on the daily chart, we are bearish with this large swing structure. We believe that the swing pullback is over because we have mitigated premium supply. And then the internal structure has shifted bearish. So from this point back to the 13th of February of this year, our expectation has been that the daily internal structure will most probably remain bearish, right? It's a probabilistic framework until we take out this week daily swing low. So if we zoom in a bit to the current daily internal range, as this is going to be most relevant for our intraday trading, we can see since, a few months now, we've been playing that daily internal pullback up towards that strong internal high. And for now, it just keeps continuing. So keep it pretty simple. I'm just going to keep following that bullish fractal order flow. Really, I'm aware that obviously if this internal trend is going to be respected, then at some point we're going to see that shift. But until we see that clear daily demand fail and shift in order flow, it's only at that point then that I'll start thinking about here. Otherwise, I'm going to keep it simple, or at least try to, and just keep following this because it could just keep holding, right? So why fight it? Why fight the immediate order flow? So we had a little bit of kind of this fractal / internal pullback here last week, creating this new demand zone. Yesterday on Tuesday, we pulled back and slightly tapped it. So coming into today, there was the possibility that perhaps, that was the end of this little pullback and we were going to get another pop higher, but it's more likely we're probably going to get a bit of a deeper mitigation before we may then continue, right? So all of that to say is that the bias for the day, purely just from a daily chart, is a little bit mixed, that we may see a bit of a bounce, but because we've only literally just tapped the zone here, if the M15 is showing bearish pressure, right, we can target deeper into the zone before then looking for that M15 shift to go higher. Okay, cool. For our chart, again, similar to what I'm saying here on the daily chart, like where we had this big swing range and we are bearish in the swing structure, the internal structure has shifted bullish to facilitate that 4-hour swing pullback. So because we're up near the premium, we're up near this swing high, we have to start thinking that any moment the 4-hour internal structure could shift bearish to signal the end of the swing pullback. And at that point, then we'll start looking to come down towards here. But until then, I'm not getting too caught up with all of these old zones to the left and what's going on. Just focus on the clear internal structure right in front of our eyes. We don't need to fight it. And as we can see, right, we are bullish. This is the current range we are working within. So after that 4-hour IBOS, we can then expect that 4-hour internal pullback. We had a bit of a sharp sell-off yesterday on Tuesday. And then we just tapped into the top of that daily demand zone that we were talking about. However, we missed, right? We didn't quite tap into this 4-hour sell to buy range. Even if you obviously definitely didn't hit the pivot, but even if you make it a little bit less refined to that sell to buy, we actually just missed it. So there is reason to believe for today's session that we have those calls for low prices to push deeper, at least into this 4-hour zone. Okay, so it doesn't have to. It's always a bit tricky because we could just tap the edge of that daily and go up, like I said. But I would say the primary expectation would be one little leg lower, at least into here, more discount prices if we get those M15 confirmations. And then hopefully later in the week, if this bullish internal trend is going to continue, then somewhere around here should be high probability to try and see if we can get that next leg. Of course, anything can happen, but this is going to be a decent area in which I'll be aggressively looking for longs if we get our M15 confirmations, right? So let me play the M15 a little bit nearer to Frankfurt Open when I'm doing my pre-session analysis. M15 swing structure is bullish. All right, big overextended run. After the boss, what can we expect? We can expect a swing pullback. We were trying to play that on Tuesday. Price just literally sold off in one move, and then we almost got this pullback up. So bit of a tricky day to try and get involved. Like I just said on the 4-hour chart, we have just missed that 4-hour larger sell to buy range. So there are calls for lower prices. In terms of the internal structure, like when we got this straight move up here, there's nothing really for us to work with to map as clear, significant internal structure in that leg. So I kind of ignored it. Then when we got this sort of push down, pull back and a push down, well, really that's the only structure we have to work with then. And like I said in the session recap yesterday, it's not really that significant of a pullback, right? It's a bit of a small pause and a go, but it's all I've got to work with. So I'm happy to mark it up and try and use it as my internal structure at the time, right? But we end up literally just selling off. And then coming today, we've just kind of had almost a vertical move back up and then sideways price action. So it's a bit of a weird scenario where we don't really have clear internal structure to map. So the way I viewed it, as you would have seen in my pre-session analysis, is basically viewing that as one internal leg down, and then this is an internal pullback. And then my primary expectation is for price to then come down and take this weak low, right? Because it hasn't broken anything significant in this leg to the left. And there's cause for lower prices because we haven't yet hit that 4-hour demand zone yet, right? In the 4-hour swing discount. There's no real clear strong liquidation here. It's all a little bit of corrective. So to me, that was my primary expectation, that this was just an internal pullback to then target lower. Okay. What I had in the back of my mind as the bullish alternative, but not as likely, would be, and this can sometimes happen, is you get a sharp move down like this. That then is the end of the swing pullback, but we don't quite know yet. You'll then see price kind of start to sell off. And then for whatever reason, it will hold, like say, a zone within here or sweep something. And then we'll get something like that. Okay. And then obviously then you can kind of start to map this sort of bullish internal break. And then at that point, we have somewhat of a protected low because it broke a high, potentially swept some liquidity, right? Then you've got a fresh zone. And then we can start thinking about longs here. Okay. So that's obviously a bit more of an advanced forecast, but what I would call, the less likely option. It's just sometimes what these complex structures can evolve in, that can happen. So when you are maybe aware of both sides, which is good, but maybe then you get paralysis analysis, what I always say is try to pick what you think is your primary expectations, what you think is more likely. And for me, that was a sharp sell-off. This was that pullback, and then I was looking for price to come down to take out that weak low and hit down into that 4-hour demand and the discount of the 4-hour swing range, particularly with how that low formed, kind of with that corrective sell side liquidity there. So, prime expectation is for me to look for shorts. Okay, is price ready for us to look to get short? Well, we've pulled back to kind of this, not that great of a POI, but it's there. It's about a level of supply, and we've had an M15 chock. But this price action is just crap, right? It's not how a strong protected high typically forms. Either you want to see price come up and then have a sharp move down, or we get that sweep of liquidity, right? And then ideally, that sharp sell-off with supply being respected. And then we can try and, get involved in these shorts down here. We don't have any of that. At the moment, we just had this sideways price action, leaving all of this buy-side liquidity above here, even with these Asia highs here. And then we have like a little wick break of this low here. There's nowhere I want to personally jump in short yet, because the only POIs I can jump on, I can draw if I did want to short, would be, something here, which arguably you could say we've kind of mitigated, and you've got then this level here. But one that isn't really fully mitigated, but potentially there, it's all a bit crap. But the main thing I don't like about it is these really horrible equal highs behind, and then the bigger equal highs. There's a massive pool of buy-side liquidity here. But if you always wait for that Asia high or obvious pools of liquidity to be swept before getting involved, so what I mean by that is there could be a nice short here, but you don't want to take it short because of this behind, then sometimes you can miss out on a lot of trades before price comes back for that later. So, do we want to miss out on this? How do we approach that? How do we decide that we do want to accept the risk and get involved, if there is bearish order flow here, rather than waiting for that to go? Well, kind of the mechanical rule, or at least, a systematic thing I kind of want to see a lot of the times in this scenario is at a bare minimum, I want to see like that first level of supply kind of be respected and then push down at session open. So then that will then give me, at least I can start to see supply really holding and we're going down and we're moving a decent distance away from here. Then, okay, fine. Then I'll potentially take the risk and look for that short there because I've seen supply being respected, as that session volume's kicking in. But ideally, what would be even better is a sweep zone forms. So literally as simple as, like, say we had this, Frankfurt opens up, sweep at that high, and then we push down. Because now we would have a new zone that formed through a sweep of liquidity with the session open volume. So now if price came back in, I'd be a lot more willing to accept the risk to get short here, hoping that I'm catching this move with the risk that we could get that larger sweep and then we go. But because we've already had the liquidation here, that tells me that potentially the logic and theory behind it is that the big guys have used the buy side liquidity behind the high to position themselves short. So I know I've said a lot here, and if you're new, this can be very, very overwhelming, and I get it. What I'm trying to say here is that ideally we want to get short, we want to target this week low. We're starting to see, well, not really, it's not that convincing, but we want to see bearish order flow going in. But when there's such obvious buy side liquidity up here, and we haven't seen that liquidation, like if this had to come down and liquidated that and then gone, bang, high probability, let's get involved now aggressively to get short. But because that hasn't happened, I basically want to see a M15 liquidation here. That's the way I could summarize it. The only way in which I would more consider getting involved if there wasn't an M15 sweep is just if we saw that kind of real sharp M15 sell-off and we saw supply be respected, right? And then you've got a zone here, we've moved quite far away. Perhaps I'd accept the risk and get involved. But yeah, simple rule, wait for a sweep and then you can look to get involved, right? After that, that should be a sweep there, right? And then you've got a sweep POI. I'd be way more willing to accept the risk there. Okay, bit of a longer sort of talk about that, but I think it's worth going over because it can be a bit tricky. So at this point, you sort of have a mitigation here. It's a little bit crap. It's there. Tons of liquidity behind it. Then just coming into session open, we're wick breaking here. This is not a sweep zone. Nothing I'm really interested in. So basically, just waiting for the session open volume, and I want to see one or two things. Ideally, a sweep and a push down, and then we'll get in short, or at least just convincing all the flow coming in. Then I'll consider the short. That's the shorts. For longs, I'm aware we could get something like this. So we sort of correct down, maybe hit into this demand. Do I want to jump in long there? No. Ideally, I want to wait for that bullish IBOS up here and then the pullback. That would be the long I'd consider. Or perhaps maybe if we came in and had a convincing supply chain fail, maybe I considered a long here to then target that liquidity. Okay? So a bit more advanced concepts there for the long, or forecast I should say, but just something to have in the back of your mind to see how the session develops. But generally, if you're not sure during pre-session, this all looks a bit crap, but just moving sideways, it's as simple as just waiting to see what does the market do when the session opens. Generally, you'll see a liquidation and you'll just start seeing all the flow move in that direction, and it just kind of becomes quite obvious. They're the easy trades we want to wait for. If we have to get super complicated with all these forecasts, it's usually not the best trade to be in. Now, we started to sell off with a little bit more at session open, so now at least we have a candle closure below that low, right? That's good, I like that. But if I want to get short, what POI can I use? Well, this one is basically already had a slight mitigation here. So now you kind of got this buy to sell candle, which again isn't great. No lid, didn't sweep liquidity. It's kind of just more just a pause in the price action rather than a nice real clear move. But arguably you could say it led to the true breaker structure of this low. And sometimes when you get these quick series of mitigations, this can hold. So I'm a little bit annoying about it, but really what I want to see, like I said, is a sweep and then we go. That's the move I want. So I just didn't really like this. Sold off a bit more when we were coming back in. Now, if you did want to get involved, if there was a really clean low time for entry model, imagine we came in, if I bring it back a couple of candles, where we had something like this, where we popped up a little bit, then we M5 chalk, fake break, and then we get a little retrace candle. And this is what I mean. I try not to write myself off too much. I don't say I'm definitely not going to trade from this POI, because sometimes things can just shape up where you've had just enough confidence with everything involved where do you know what, actually it makes sense to me to hit it. I can get the risk reward I want. Let me just draw this on. Where then suddenly you're okay, not the best POI in the world, maybe not the best narrative, but I've just about seen enough, I want to take it, right? Sometimes that can happen. But something like that, we get the fake break liquidation, we mitigate the extreme, there's a tiny little retrace candle, it means we can get our stop loss behind here, and then suddenly, your target is here, you'll come in, you've got enough risk to reward into this minor demand zone in case we do pop off of it, excuse me, and suddenly do you know what, I'm willing to take it. Now, doesn't mean it's high probability necessarily, but I'm just trying to say how things could shape up, where that might be worth it for you. Whereas, what happened in this scenario, we got a big candle like this. So I immediately know, oh, no, I'm really not interested now, because now you've got to do something like this. Even if you clip your stop loss, aggressively behind, you've now got to go all the way down. Now, that still might be worth it to you. You still might like this overall. I just wasn't that convinced, because I didn't, all of that liquidity behind, and we didn't have to sweep yet, and I was concerned about this POI, that this could turn into something like that, to take that before we then go. So all in all for me, I just didn't like it. I was kind of hoping we'd get a sweep of that, or something, I don't know, just something a bit more. So I left that alone. Now, if you're on the M1, that obviously does help with the risk reward. And there was an LC2A here because we had the troc. And then the fake break liquidation there, and then obviously then you get the tiny candle right at the extreme. Now, in this scenario, when I'm expecting an M15 POI to be swept, and then we're in this tight range, and then the liquidation happens here, but then we go up with such momentum, but quite far away. That's not typically how a high probable sort of textbook entry model looks like. Would I have the confidence to take that? If it was a sweep zone, yes. But in this scenario, I don't know. I probably would have been a little bit hesitant, but this trade eventually ends up working quite nicely and was a winner, but depending obviously how you manage it. But yeah, there definitely was a valid trade there. If you were happy to kind of trade without a sweep zone, you can see prices shopped around, and I don't think it's there. Okay, there we go. End of session. Sorry, or coming into 9 a.m. UK time, so GMT +1 at the moment. We did eventually break low, so you would have got a quick scalp below down to that point. Now, this for me was kind of where I was like, I don't, my session's kind of over, because although now I'm seeing more of what I said at the start I wanted to see, which is if we don't get a strong liquidation, right, so none of these highs have been swept, but we do start to really see supply be respected and we're getting that order flow and we're moving far away from that buy side liquidity pool, then fine, I'm a bit more willing to accept getting involved in here because, well, it's less likely we're going to come back here during a session, so I'm willing to get involved. We're seeing supply hold. But because we were coming off this level, and for about the last 2 hours, we'd been moving really slowly in a 10 pip range, and we didn't have that M15 sweep yet, I kind of just writ off the session. I was like, do you know what, I'm done. I don't really like this POI. No lid. We haven't had a sweep, so I just left it alone. But it ends up eventually playing out quite nicely. We got the pullback in. So on the M5, if you're looking from this POI, at this point, right, step 1, POI mitigation. Now, step 2, if you're blindly mechanical, you could say, right, we had lid. So anything, if you're wondering what is lid or what is P-bid, like what's the pullback and what's the previous leg, just look for the lowest point. Everything to the left of that is the leg, that's lid. Everything to the right of that is P-bid, right? So the left is lid. So obviously this high is in the leg, so that's why that is lid. But obviously, that's not great. We want the lid to be obvious and near. We've had the liquidation of that. Prices pull back in. Mitigate the PBL and just continue. So technically it's valid. If you don't use the PBL invalidation method, which I don't, I use discretion. But for me, that's not really like what I want to see. I want to see a very clear liquidation, like a clear thing here, or like an LC2A in the pullback. And considering I already didn't like this, all of this liquidity behind, I was expecting that move, and it's the end of the session. I didn't want to get involved. Now it ends up giving a clear LC2A into London Null. This is obviously a much cleaner liquidation as of when it happens, where you get the M5 chock. Now you've got a clear liquidation in the pullback. Okay, nice corrective move. But yeah, main thing here was London Null as well, which isn't ideal. Now, I'll happily trade through London Null if I view it to be high probability, but for all the reasons I keep saying, without having that M15 strong liquidation, wait, what's that, 2? Yeah, so 3.8. At that point, maybe we'll probably just cover the top. Without having that M15 sweep and with all that corrective liquidity behind, I just didn't have the confidence, so I just wasn't really looking at this. But yeah, potentially you could have taken this trade, and then it ended up working out really nicely eventually. And when I see that, that's what I'm thinking, okay, Matt, like if I just massively overcomplicated things, like before pre-session, I didn't give a shit about this POI. I knew, like for me, it's not really what I'm concerned about. Like, and it's just, this now just looks really easy. Just had bearish order flow being respected, nice clean LC2A, weak low to target, like, or at least getting your 3R in and out. Oh, why didn't I take it? Did I overthink things? But maybe it's a bit of a tricky one. I just think when we had such obvious liquidity and not one of these POIs got swept, I personally just didn't have the confidence, especially when price was literally in this little 10 pip range and we were coming off this zone. I just thought we'd see something like that before we would go. But yeah, I was wrong on this occasion, so it is what it is. Now the difference would have been if we had got something like this, maybe like a sweep of even just that buy to sell candle, but ideally like the structural high and then push down and then got that corrective pullback, then yeah, I'd be way more willing to trade through this zone because I don't really care about that zone. It's we expect it to fail if we're going to get that move down. So yeah, that was how I viewed that. I just got thrown off with no liquidity sweeps, but it is what it is. So then this was kind of around London Lull. We obviously had a couple of high impact news announcements during New York. So price actually failed to take the low at that point. Now, when price action was around here, this is where some of you may have seen that New York analysis that I shared, which is kind of interesting because I've noticed this not that often, but sometimes when, like, obviously we're expecting before we get the pullback, especially when we come so near to that low, we'd want to see that low get broken, right? and then that liquidity has been taken into 4-hour demand, then we can start to play the pullback or potentially even the reversal. When we get so close to that low there and we start to pull back, normally we would think, oh, this is just a bull trap. It's trying to entice early people to get long. Then they'll get stopped. Big equal lows liquidation into 4-hour demand. That's the move we would then look for, right? That's a lot higher probability. Because technically, if we were to buy now, like from this demand, we're buying from kind of these big equal lows, and that could be that bull trap, right? So how do we have the confidence to potentially get involved here when we haven't had the sweep of that low? Well, this is where you can look at something like the DXY. If you don't know what the DXY is and everything, I don't want to go into this too much for depth for now, so don't worry about it, don't get confused. Some of you will know what this is, but essentially, I'm going to do a whole lesson on this in the Put on Trade Lab, most likely in the near future. Essentially, it's just a basket of currencies that show the value of the dollar. So rather than just looking at euro dollar, it's going to have euro dollar in there, pound dollar, USD yen. It's to show the strength of the dollar against all of the currencies. So basically, if this goes up, the dollar's strong. If it goes down, the dollar's weak. So obviously, that's the inverse to euro dollar, because if this goes up, the dollar is strong. So in euro dollar, the dollar is strong. What's it going to do? It's going to go down, right? So what you can do, if it helps you think about it, is if you press Option or Alt and I on your keyboard, it will flip it. So now this is in line with euro dollar. Okay, so if this is going down, then we expect euro dollar to go down, right? So it's going to move similar to how euro dollar moves. It's correlated now with the price action. Again, if this is confusing, literally don't worry. It's kind of more for the advanced guys. So the point we were just looking at euro dollar we were talking about is price action is here and it had started to move away, right? So if this was euro dollar and it was starting to move away, we'd be a bit worried that's just a bull trap. We'd expect the low to go, and then that's when we'd want to play the pullback. Well, actually, at the time we were looking at euro dollar when that happened, the DXY was here. So the DXY had already taken that liquidity. So that can actually give us an early signal that perhaps the dollar is ready to show a bit of weakness now. So if I go back to the euro dollar, whoops, wrong chart. Put it the right way. Again, I can appreciate this will be confusing, so don't worry, but where's my drawings? There we go. Essentially, jumped ahead now, which is annoying. Simple as this. We were looking for that liquidity to be taken before expecting a more significant bullish move. The DXY had shown that previous day's low had been taken. Therefore, if we start to see this moving up, we can have more confidence than we normally would to start to expect some short-term dollar weakness. That's the whole point there. So that's what I was putting in the New York chart analysis, that potentially now could be the move that we can potentially look for some quick longs to target all of that buy-side liquidity that I was hesitant about shorting from during London. So the Asia highs, but more importantly, these big equal highs here. So this could be that POI you're looking for, but because this is a risky play, right, that this could be that bear trap to go lower before we go, really I'm basing this on the DXY having swept that previous day's low. What would be ideal is you look for the supply chain fail first, then we come into here, and then we look for that quick long, literally just to target here. Because at that point, what do we have? We still have a weak structure. We still have those equal lows. That could then be the liquidity that was needed, that buy-side liquidity for the big guys to fill their orders short against all of those buy orders to then get that move down. Okay? So, again, this is quite advanced, so don't worry. But essentially, during London, what we wanted to see was that high get liquidated, bearish order flow shift, and then all of these sells within here would have been really high probability to target that low. We never got that. We never got that liquidation during London. So there were some more aggressive shorts within it. We then failed to take out the low. We started to push up. The DXY had basically swept this low to give us some bullish signs that potentially price is ready to pop up. At that point, it then has the liquidity to potentially continue that movement then down. So that's what we were forecasting to see if that would happen during New York. We got the supply failure here. But that's when we're looking for price to come back in, but ended up not doing that. We had high impact news around 3 p.m. UK time, ended up taking those highs, and then just like magic, there's a liquidation with the news to come down. Obviously, you don't want to be buying from this at that point because the objective of what we were trying to play there is complete now, right? We were just trying to take out that liquidity. That liquidity is now being taken, so now trying to do that against that is much lower probability, no lid, big equals behind, those weak lows, end of session, just let the market do its thing at this point. That's the end of the day. So yeah, no real trading opportunities during New York there. It was just that much more advanced player looking to see will we get a quick pullback to look for a quick scalp to take out those highs. But we didn't get it. So yeah, a bit of an interesting day. I personally find these ones a little bit tricky. Maybe I'm waiting for a little bit too much there with perfection. Like I said, just to recap that, ideally I want to see at least one sweep zone form. Then I'll have a lot more confidence to get involved. Otherwise, how can I get involved without an M15 sweep? Well, I just want to see supply holding. At that point here, we had that. But because we kind of had this zone here, and this was such a big obvious pull, and we were moving so correctively in like a tight little 10-pip range, it took like 3 hours to just do that. I just didn't have the confidence to get involved because I thought we may see that sweep and then we would go. So I just left it, but it ended up working quite nicely. So it is what it is. And then, as we saw that sharp retrace here, I thought, kind of seen this price action before. I definitely wouldn't want to short against that. Had a quick look at the DXY. Could see that essentially we had the equivalent of price sweeping that low. So then we were looking to see where we get the pullback. We didn't get it. Price took the liquidity into high impact news. Trade ideas are all over now. Just let the market do its thing. Come back the next day. And there we go. We eventually got that IBOS that we wanted from the start of the day. Now have a new protected high formed through a big sweep of liquidity. So now it gets interesting because really the question is for tomorrow, are we going to see the continuation of this bullish 4-hour internal trend? That's step one. Step two, if we are, where is it going to happen? In my opinion, this is a high probable area to look for longs, so I'm happy to take losses in this area. Again, anything can happen. We could push down lower, sweep this low and then go. We could have that full-blown reversal, like down here now, if we are ready to end. So obviously, always be aware of that. Always be aware that anything can happen. But then also identify areas in which you know over the long term are going to be high probability. And don't be afraid to be a bit more aggressive in these areas, right? That's where I'm personally willing to take a few losses. Whereas if we start to push down like this, am I aggressively going to start jumping on a little M15 chocks down here? No. Whereas I will do that here, right? Again, this was nice for our level, pays to be aggressive here. That's when you want to step your foot on the gas. Obviously still, don't just jump in on any old trade. I'm just trying to say where you want to be a bit more aggressive than you normally would be. It's in those key high time frame areas. So tricky now to see where we get that. Obviously we're forming this bearish internal structure. So let's see if we can ideally get a nice strong M15 order flow shift. And then we'll have to see how price action forms. Cool. Hope you guys took some value from that. And I'll see you in the next one. Cheers guys.